Welcome to the deep dive. So, 2024, the global economy. It felt sort of steady, but also pretty uneven when you looked closer, right?
Definitely uneven. You had this real split, didn't you? Manufacturing, particularly in Europe and parts of Asia, was really feeling the pinch.
Yeah, the supply chain issues just lingered, plus weaker demand from overseas.
Exactly. But then you look at the services sector, everything from tech to your local cafe, and it was holding up much better, more resilient.
And inflation, we heard a lot about it easing overall.
True, the headline pressure came down.
hmm
But services inflation, that's been stickier, and there's still this background risk of prices maybe rising together again.
Which keeps central banks on edge, I imagine. Lots of uncertainty about future policy moves.
Absolutely. It creates a pretty uncertain landscape overall.
Okay, so the sources we're looking at today really try to unpack this complex picture.
They do. They paint a detailed view. This divergence between manufacturing and services is a really key theme.
You mentioned the PMI earlier, the Purchasing Managers Index.
Right. It's like a monthly health check. The global composite PMI, combining both sectors, showed expansion. But the manufacturing PMI
That was weaker.
was actually signaling contraction for a good chunk of 2024.
Mm.
Thankfully, it seemed to stabilize around November.
So it's pretty striking how one part of the economy could keep chugging along while the other faced such headwinds.
Precisely. Manufacturing struggled with getting goods moved, fewer orders coming in.
But services tech, finance, tourism, that kind of thing, they managed to weather the storm better.
Much better, generally speaking. Though even within services, the recovery wasn't perfectly uniform, of course.
Now, back to that sticky services inflation, why is that harder to bring down?
Well, a few things. Wages in some service industries are a big factor. Plus, services costs often aren't as directly tied to, say, global oil prices as manufacturing costs are.
Like the price of a haircut versus the price of plastic goods.
Exactly. More influenced by local factors.
Yeah.
And the worry about synchronized price increases.
Yeah, what's the risk there?
It's that even if commodity prices behave, some other shock, like geopolitical instability or a sudden demand surge, could cause prices across many different sectors to rise all at once.
Making it much harder for central banks to get inflation under control again.
Precisely. And you can't ignore those background geopolitical tensions, the ongoing conflicts, trade policy questions.
They just add another layer of uncertainty.
They absolutely do. Significant challenges. And all this global turbulence, it's the backdrop for understanding how India is navigating things.
Right. Which brings us to the core of this deep dive, India's position. We've got sources covering, well, everything from India's own macro picture to finance, trade, social progress, even AI.
A really wide range.
And our mission, as always, is to cut through all that information, pull out the key insights for you, the listener, and just make sense of these complex issues without drowning you in data.
Exactly. So let's start by placing India's own economic performance within this global context we've just sketched out.
Okay. So how has India's economy been doing in the current fiscal year, FY25?
The overall picture seems quite positive, actually. Projections suggest stronger industrial growth compared to the average of the last 5 years.
No, really. What's driving that?
Mostly electricity generation and construction. They're expecting overall industrial growth around 6.2% for FY25. Shows some real domestic strength.
And India's trade connections. Global trade saw a bit of a rebound in 2024, didn't it?
It did. And India's external sector seems to be holding up reasonably well. You've got a surplus in services trade, exporting more services than importing.
Plus remittances, right. Money sent home from Indians abroad.
Exactly. That provides a really valuable cushion. And foreign direct investment, FDI.
Money coming in from foreign companies.
That actually increased in the April to November 2024 period compared to most previous years, which is interesting.
But you also mentioned repatriation, money going back out.
Yes, there was an uptick in repatriation too.
Why would both be happening? More money coming in, but also more going out?
Well, the sources suggest the repatriation is mainly things like secondary sales, multinationals selling existing investments, and also IPOs. The strong Indian stock market made it a good time for some investors to cash out.
Ah, okay. So not necessarily a loss of confidence, but maybe taking profits or strategic exit.
Exactly. It actually signals a dynamic market where people see opportunities both to invest and to realize returns later on.
That makes sense. Now, employment. Always critical. What's the story there?
We're seeing some positive signs. The labor force participation rate is up, more people working or looking for work.
And the worker-to-population ratio, too.
That's up as well. And importantly, the unemployment rate has decreased.
good news. Anything specific about the type of employment?
Yes. What's really encouraging is the growth in formal sector jobs. You can see this in the EPFO subscription numbers, the Employees Provident Fund Organization.
And net additions there?
They more than doubled between FY19 and FY24, and a big chunk of that growth is young people, the 18 to 25 group.
So a trend towards more formal jobs with potentially better security and benefits.
That seems to be the direction, which is definitely positive.
Okay, great. Let's shift gears now to the financial sector. What were the key developments we should know about?
Well, one big move was the RBI, the Reserve Bank of India, lowering the cash reserve ratio for banks.
That injects more liquidity, more cash into the system. Right?
Exactly. Helps encourage lending.
We also saw improvements in the health of regional rural banks, RRBs. Their bad loans, non-performing assets, hit a 10-year low.
And banks were lending more actively, too.
Yes. The credit-to-deposit ratio, how much banks lend out compared to the deposits they hold, actually hit its highest level in 33 years. Indicates strong credit growth.
Wow. And what about NABI FDI? That's the new infrastructure financing bank.
Right, the National Bank for Financing Infrastructure and Development. It's playing a crucial role. By September 2024, they'd sanctioned about $1.3 trillion in loans.
Mostly for what kinds of projects? Concentrated in roads and energy, especially renewables. And they have big targets to ramp that up significantly by the end of FY26.
And they offer longer repayment terms, which is key for infrastructure.
Absolutely vital for those kinds of long gestation projects.
Technology is changing finance everywhere. How's AI and machine learning being used in Indian banking?
It's becoming really widespread. Banks are using AI and ML for, well, all sorts of things. Credit underwriting, spotting fraud, risk assessment, portfolio management.
Even customer service, like chatbots.
Exactly. Chatbots, regulatory capital planning. The list goes on. The tech advancements are really creating opportunities to change how banking works fundamentally.
Okay. Now, the Insolvency and Bankruptcy Code, the IBC, that was a major reform. How's it performing?
It's definitely had a big impact. By September 2024, over 1,000 resolution plans were approved. Creditors recovered about $3.6 trillion through the IBC process.
Which is likely more than they would have gotten otherwise.
Significantly more, in most cases, than if the companies had just been liquidated, though creditors often still took a haircut, accepting less than they were owed.
Are there calls for improvement?
Yes, there's a sense that the process needs streamlining, and they need to be stricter about, frivolous applications that can clog the system, making it even more effective.
Right. Now, the stock market. There was some data comparing market cap to GDP.
Yes, the market capitalization to nominal GDP ratio. As of December 2024, India's was around 136%.
How does that stack up globally?
It shows significant market activity relative to the economy's size. But you have to be cautious with direct comparisons. Different countries, different market stages, different economic structures.
Understood. And looking ahead to 2025, what are the potential risks for the Indian stock market?
The sources flag a couple of things. One big one is the high valuation in the U.S. market and the risk of a correction there.
Because the markets are linked.
Historically, yes. The Nifty 50 in India has shown a strong correlation with the U.S. S&P 500. Major downturns in the U.S. have often meant negative returns in India shortly after.
So global factors, especially the U.S., are really important to watch.
Definitely something for Indian investors to keep an eye on.
What about the IFSC, the International Financial Services Center? Is that gaining traction?
It seems to be. The ecosystem there is growing. More fund management entities, alternative investment funds, insurance companies setting up shop.
And they're raising capital.
AIFs in the IFSC had raised substantial amounts by September 2024, and the reinsurance business there is also growing quite a bit. So yes, it's gradually becoming a hub.
Pensions, always a vital topic. How sustainable is India's system like the NPS and APY?
Well, the National Pension System, NPS, is known for being pretty low cost globally. It's a defined contribution system, which helps manage the government's liability.
And APY, the Atal Pension Yojana.
That's aimed specifically at the unorganized sector, which is huge in India. The real challenge, though, is getting broader coverage, especially in that informal sector.
So scalability is still a work in progress.
Effectively reaching the vast informal workforce remains the key challenge. Combined coverage is still relatively small compared to the total population.
Cybersecurity, increasingly critical. How's India doing there?
India achieved a Tier 1 ranking in the Global Cybersecurity Index for 2024. That shows a really strong commitment and increased capability.
Which is essential for the digital economy and finance.
Absolutely crucial.
We're also seeing banks aren't the only players in lending anymore. What's changing the financial landscape?
That's a really important shift. You've got other financial service providers, innovative platforms. UPI has been revolutionary for payments, obviously.
And things like OSIN and ULI.
Right, the Open Credit Enablement Network, or CNN, and the upcoming Unified Lending Interface, ULI, from the RBI. They're making it easier for more people and small businesses, MSMEs, to access credit.
So potentially a big boost for financial inclusion.
Huge potential,
Yeah.
especially ULI for MSME financing. The diversification is good, but you also need to be mindful of risks. Avoid excessive financialization that could create systemic issues down the line.
Good point. Okay, let's transition to trade and industrial policy. We know global trade bounced back somewhat. What else is important here?
Well, looking historically, the sources note that successful industrializers often use tariffs, but carefully. Calibrated use, often tied to performance requirements for the protected industries.
Not just blanket protection.
Right. And interestingly, globally, we've seen a rise in non-tariff measures, NTMs, between 2020 and 2024.
Things other than taxes that restrict trade.
Exactly. Product standards, regulations, what they call technical barriers to trade, or TBTs, are common. They've impacted agriculture and manufacturing quite a bit.
And what about those new EU environmental rules, the deforestation one and the carbon border tax?
Ah, yes, the EUDR and CBAM. Significant developments. They'll impose new compliance burdens on businesses trading with the EU.
Potentially impacting Indian exports.
Potentially, yes, in certain sectors. Businesses will need to show they meet specific environmental standards. It's something to watch closely.
How's India's own export performance been, and what's the strategy?
In FY25, performance showed strength in existing markets, but also a real push to find new markets. Diversification is key.
Diversifying markets and products.
Both. There's a focus on increasing the share of man-made fibers in textiles, for instance, to match global demand better. And e-commerce exports are growing too.
Are there specific initiatives to support that?
Yes, things like the e-commerce export hub, ECEH, and Farab Mart aim to boost cross-border e-commerce, especially helping MSMEs access international markets.
We touched on FDI earlier. What's the broader picture with capital flows and India's current account deficit, the CAD?
Well, while FDI inflows dipped in many parts of Asia in 2023, India saw gross inflows increase in early FY25. But attracting FDI remains crucial.
Especially with developed countries also competing for investment.
Exactly. And regarding the CAD, the import-export balance, there's a debate. Given potentially tougher global capital flow conditions, India might need to aim for a lower, more sustainable CAD level than perhaps thought before.
And tax certainty helps attract investment.
Consistently highlighted as important for wooing FDI. Predictability matters.
Okay. We saw core inflation, excluding food and energy, coming down in most places. Why was that?
Mainly due to moderating international commodity prices. Suggests central bank policies and maybe easing supply issues had some effect.
What are the GDP growth projections for India?
For FY25, the estimate is around 6.4%. And for FY26, the following year, projections are generally in the range of 6.3 to 6.8%. So still a strong trajectory.
We hear the term hyperglobalization. What are the risks, especially with rising geopolitical tensions?
Well, deep integration brought benefits, but also vulnerabilities. Intense competition left some behind. And recent tensions just highlight the fragility that can come with being so interconnected.
How's the structure of global manufacturing changing?
We're seeing a gradual shift, with developing economies increasing their overall share of industrial production. The balance is changing.
China's dominance in areas like solar panel manufacturing, does that pose risks?
Absolutely.
Yeah.
Holding over 80% of the solar PV supply chain creates significant concentration risk. Disruptions in China could really impact the global energy transition.
So for India's goals like net zero and boosting e-mobility, public transport is key to reduce reliance on imports.
Hugely important. Expanding public transport is vital. Right now, access to mass transit in Indian cities lags behind places like Brazil or China.
Better integrated systems are needed.
Yes, connecting different modes efficiently. It cuts import dependence for e-mobility, hits climate goals, reduces congestion, and improves access for everyone.
We mentioned MSMEs earlier. What about the burden of regulations they face?
It's a significant challenge. Compliance burdens can hinder formalization, limit productivity, stifle job creation and innovation. Deregulation is seen as essential.
Can you give an example of how regulations can backfire? You mentioned premature load bearing.
Right. A classic example is classifying land beside roads as protected forests. Good intention, maybe, but it creates huge delays and costs for businesses needing basic access. Premature load-bearing is imposing complex regulations suited for highly developed economies before the state has the capacity to actually implement and enforce them properly.
Like having too few factory inspectors for the number of factories.
Exactly. It leads to ineffective enforcement and unintended negative consequences. We need simpler rules and better state capacity. Learning from best practices across states is also key to boost economic freedom.
Okay, let's shift to investment and infrastructure development. What's the progress there?
We're seeing good momentum in capital expenditure, both in specific infrastructure sectors and overall government capex. Port capacity is improving. The Sagarmala program is showing progress.
And digital connectivity.
Yes, 4G mobile services are expanding into previously uncovered villages, supported by the Digital Bharat Nidhi. That's the new name for the Universal Service Obligation Fund.
What about urban infrastructure? Sanitation, transport.
Significant progress under Swachh Bharat mission. Urban diehards, better waste collection, protocols like ODF Plus and Water Plus track improvements.
And metro rail.
Expanding in many cities, along with rapid rail. Big benefits for congestion and emissions. Plus, the AMRUT mission is helping improve water supply and sewerage coverage in urban areas.
Okay, turning to specific industries. Any highlights?
Well, the industrial sector saw growth in FY25, led by electricity and construction, as we said. India remains the world's second largest cement producer. Huge capacity there.
Electronics manufacturing.
Big increase, especially mobile phones, really reducing import dependence, which is a major goal.
Textiles.
Exports grew in FY25. Focus on diversifying markets and also shifting the product mix towards more man-made fibers to meet global demand.
And innovation. Patents.
India's innovation ecosystem is flourishing. Rankings and patent filings are up, IPR rules have been streamlined. But becoming a true manufacturing powerhouse needs sustained effort from everyone involved.
The services sector has been the main growth engine recently, right?
Absolutely crucial in FY25, especially with global goods trade being a bit sluggish. Services contribute hugely to India's GVA, exports, and jobs.
Any specific areas doing well?
Tourism is seeing a rebound in international arrivals, boosting foreign exchange. Real estate is strong office demand, residential sales. India's ranking in the Global Real Estate Transparency Index has improved too.
And there's potential for states to integrate services better with industry.
Yes, huge potential, especially for states with a strong industrial base already. Integrating services into those value chains could unlock further growth.
Okay, let's move to agriculture and food management, a vital sector. How's it doing?
It showed sustained growth. Key factors are government support, like assured prices, better credit access, crop diversification efforts, and promoting sustainable practices.
And food grain production.
The Kharif food grain production projection for 2024 looked positive, which is good for food security. Horticulture fruits, vegetables is also doing really well. Grape exports from Maharashtra are a great example.
But climate change must be a major concern.
A huge concern. There's a clear link between rainfall deficits and crop losses. Rising temperatures are also a threat to productivity.
So adaptation is key. Irrigation, different crops.
Exactly. More irrigation, developing heat and water-resistant varieties. Government schemes like MISS-SS for interest subvention and PMFBY, the crop insurance scheme, are crucial safety nets.
PMFBY is the world's largest, isn't it?
It is. And they're using tech now for better transparency, like drone imagery for crop cutting experiments. Farmer enrollment is up too.
What about support like extension services and cooperatives?
Extension services, training farmers, the Kisan call centers, all important. And initiatives to strengthen cooperatives, like setting up new PayCS, providing financial services through them. But the underlying challenges of climate change and water scarcity need continuous R&D and adoption of digital tech.
Climate initiatives more broadly, what's happening?
Well, the upcoming COP29 is being called the Finance COP, focusing on new climate finance goals. Domestically, India is focusing on adaptation, like the MISTI program for mangrove forests in coastal areas.
Which has environmental and job benefits.
Both. And various states have notable water management initiatives. Gujarat, Varanasi, Meghalaya, Chhattisgarh. India
still relies heavily on coal, though.
Yes, due to resource endowments. But there's a push for efficiency, using supercritical and ultra-supercritical plants, developing even more advanced tech. And non-fossil fuel generation is increasing its share steadily.
Are financial regulations adapting too? Green investments.
Yes, things like expanding the BRSR, business responsibility and sustainability, reporting requirements for listed companies, pushing for more transparency on environmental impact.
And plastic pollution.
India's per capita consumption is relatively low, but the plastic waste management rules are in place to manage the issue.
Let's talk about the social sector. What are the key trends?
Government spending on social services is generally increasing. We see significant welfare benefits from the food distribution systems, PDS and PMGK-AI. Cash transfers and SHG loans are also boosting consumption for poorer households.
Education, foundational learning.
Big focus there. Initiatives for foundational literacy and numeracy, NIPUN for it. Also promoting social and emotional learning, SEL, as part of holistic development.
And using technology in education.
Yes, things like the PM eVidya channel for Indian Sign Language, providing ICT labs, smart classrooms, the Teacher App platform for teacher training.
Higher education enrollment is up.
It is, and the gross enrollment ratio, GER, is rising. But more infrastructure is needed to hit the 50% GAR target by 2035. There's also a call for institutions to go beyond minimum accreditation, foster diversity.
Healthcare. What are the pillars of policy?
Key pillars include expanding access, improving quality, and making it affordable. Ayushman Bharat PMJDY is huge, the world's largest health insurance scheme.
Covering more people now.
Yes, recently expanded to include seniors aged 70 and above. Plus, you have the Jan Aushadhi scheme for affordable generic medicines and growing use of telemedicine.
Mental well-being is getting more attention too.
Critically important. Concerns about hostile work cultures, excessive hours impacting growth. Also, issues around kids, teens, and overuse of internet social media are being discussed globally.
And diet. Ultra-processed foods.
Growing evidence linking high consumption of UPFs to various adverse health outcomes. That's being highlighted.
Housing. PMA Grameen.
That aims for housing for all in rural areas, making progress, using tech like geotagging for monitoring.
And aligning with global goals like the SDGs.
Yes, focus on localizing the SDGs using cooperative and competitive federalism. Plus, initiatives for grassroots justice like Gram Nilayas and social assistance through NSAP. Dayway and RLM continues to empower rural women through SHGs.
There's also a point about regulation in health and education needing balance.
Right. Balancing societal needs with ease of service provision.
Yeah.
And maybe even withdrawing regulations where the market works well, avoiding unnecessary burdens.
Okay, finally, employment and skills, especially with AI on the horizon. India's demographic dividend, the young population, is a big factor.
Huge advantage. Median age is much lower than many major economies. Employment indicators are improving, as we discussed, more self-employed, fewer casual workers. Support for women entrepreneurs through schemes like Sankalp. Nominal earnings are rising.
And the new labor codes?
Aimed at simplifying laws, strengthening worker rights. Though implementation details, issues like occupational safety, and clarifying rules around working hours still need attention. Some states have increased overtime ceilings under the new laws.
How does climate change intercept with employment, particularly for women?
It impacts livelihoods, especially in climate-sensitive sectors. SHGs are playing a role here, helping women find alternative income sources.
What about the skill levels of the workforce?
Improving, but there's a need for much stronger industry-academia links, continuous skilling, flexible learning models. NEP 2020 emphasizes this.
Government schemes are helping.
Yes, schemes reimbursing employers for hiring, upgrading ITIs. Platforms like Future Skills Prime are crucial for upskilling in tech, like AI. And the PM internship scheme aims to give youth practical experience.
The overall goal of reforms is simplification and worker welfare.
Simplify compliance, foster flexibility, promote welfare. That's the idea.
Now, the elephant in the room. AI and jobs. Concerns are growing.
Definitely intensifying. Talk of AI workers by late 2025. History shows technological transitions do disrupt labor markets, think coal mining.
And the societal impact. Inequality.
That's a risk. If the balance between capital and labor isn't managed well, tech revolutions can increase disparity. We need coordinated efforts, strong institutions enabling ones, ensuring ones to navigate the uncertainty.
But AI still has limitations. Hallucinations.
Right. Generative AI can still make things up, needing human oversight.
Yeah.
And widespread adoption depends heavily on having the right infrastructure, high-quality digital networks, computing power.
How does generative AI actually work, basically?
It's essentially predicting the next word based on probabilities learned from vast amounts of data. Computationally very expensive.
But it can boost productivity.
Research shows it can, yes.
Yeah.
Especially in areas like customer support, particularly helping newer or lower-skilled workers catch up. potentially reducing skill inequality in some roles.
Is job displacement inevitable with new tech?
Not necessarily. Insights from past industrial revolutions suggest tech mainly displaces labor if demand for the product or service is already saturated. If demand is elastic, meaning it can grow, new tech could actually increase employment overall.
And there are still barriers to mass AI adoption.
Yes, reliability issues, resource inefficiencies, infrastructure gaps. This gives us a window, a chance for policy action.
So India's position, opportunity or threat?
Potentially a huge opportunity given the demographics and diverse economy, but it hinges on investing heavily in education, skilling, and having the right institutional support.
Collaboration is key.
Absolutely. Policymakers, private sector, academia working together to align AI innovation with societal goals for an inclusive, sustainable transition. So, to wrap up our deep dive, we've really seen this complex interplay, haven't we? Global forces, India's resilience, the massive potential of tech like AI and fintech.
Right, alongside that continuing focus on social development inclusion and the constant theme of needing smart policies and, where appropriate, deregulation.
Exactly. It's about finding that balance to keep progress going.
And while there's just so much information out there, we hope we've managed to distill the crucial insights for you today, giving you clearer understanding and maybe some actionable knowledge.
Which leads us to a final thought for you, our listener. Considering these rapid AI advances and India's incredible demographic dividend, what proactive steps do you think are most critical right now? How do we ensure a future of inclusive growth and opportunity for all?
Yeah, think about that balance. Pushing technological progress, developing the skills people actually need, and ensuring those crucial social safety nets are strong enough for this fast-changing world. Something to definitely ponder.